Hey everybody, I'm Marcos.
And I'm Kirsten.
And this is the Minnesota Real Estate Investing Podcast.
Join us every week as we discuss real estate investing in the land of 10,000 lakes.
Hi everyone, welcome to another episode of the Minnesota Real Estate Investing Podcast. We're gonna talk about our predictions for 2023 today. Oh,
because it's Halloween.
Yeah, right? Oh yeah, you're right, it's Halloween.
Talk about some scary things today.
Yeah. Oh my gosh. Yeah. Hopefully not so scary.
Yeah.
We'll see.
So our predictions, I wouldn't say they're scary, but a lot of people right now are trying to scare people. And even some of the bigger guys, like I love Jaspreet Singh, and a lot of his videos are like market crash, da, 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 and like Graham Stephan. It's all about the market crashing.
As I said in previous episodes here, I've been hearing the next crash for the last 10 years. Yeah. So, it is what it is. It feels like more relevant right now. It feels like there's definitely a change this year, especially after July. But it's just a matter of understanding what's happening, and that doesn't mean that you can't make money. That doesn't mean that you can't invest. That doesn't mean
wealth is made during market crashes. So it wouldn't be bad if you've got financial intelligence, if you've got cash. But we'll talk about that in a little bit, I think.
Yeah. We're not gonna try to scare you. We're gonna try to be honest in what we think, where this is heading for next year, and
yeah, everyone has their opinions right now. But it's just a popular topic because there's just this feeling in the air of like what's going on, and that's why we're making this video right now, because I know a lot of people are curious, and I'm always curious. Like, the clickbait works on me whenever I see the market crash. I'm like, what? Yeah. So, let's talk about it, and I would love to hear other people's opinions. So you can comment down below if you're watching on YouTube, or go over to our Instagram and tell us what you think. But yeah, let's first talk about the interest rates.
Okay. Interest rates. As everyone knows, it's a big topic. The Fed has been increasing interest rates tremendously this year to combat that. Their idea is to combat the inflation. It hasn't been working out all that well, but they're going to keep doing it. There are two more increases this year, one in November 1st, another one in December, right?
That's what they say.
Yeah, those are the rumors.
It's not like 100%, but like most of the people, at least that I listen to, are like, I trust they're going to do what they say, and which they probably will, because their goal is to get inflation to 2%, which is like...
Well, that's going to be a hard task.
Yeah, I don't think that's possible. It was 2%, right? Yeah, and maybe, I don't know, yeah. That they probably know that's not possible, but...
Yeah, if they can do it, great. I would love them to be able to do that. I'm from Argentina, as everyone know, and I know quite a few things about inflation. In my lifetime, I've seen Argentina going to hyperinflation. I don't know what is happening in Argentina right now, like hyper, mega, super duper inflation. I don't know. In 2001, it wasn't that bad. We still, every worker in the crisis of 2001 in Argentina lost about 20% of their income or purchase power, actually, just overnight. So inflation is something that you have to worry about, but we can go more into it later. And tackling inflation from interest rates, I'm not sure if that has been working. Maybe, long term we're going to see more effects, but that's what they're planning on doing. The rumors are that at the beginning of the next year, they're going to increase even more. So we could expect, as far as interest rates go, we could expect somewhere around the 10%.
Yeah, in 2023, what will interest rates be? There's a lot of people that don't think they'll get over 10% or double digits. They won't get into the double digits, but I think they could get up to 10%. maybe not for that long, but I could see it getting there to 10%. And then like that's just gonna, if that happens, that's just gonna like completely kill the housing market. So like that could happen. It'll kill the housing market, and then maybe they'll drop them back down a little bit again.
Yeah, and that was the rumor too. When everything started going up with interest rates, we talk with lenders all the time, and this is not information that we read from an article on Facebook or something. We try to stay connected with people in the industry all the time. Lenders are a big part of it. They tell us what they think, what they're seeing, what's going on in their market. And what happens is that at the beginning of all this increases, there was this rumor that what they're trying to do is trying to increase the interest rates so they have some wiggle room to take them down again, because they were zero.
Interest rates are going to keep going up. That's our prediction. They're going to keep going up.
Yes.
And then the other prediction is that they'll probably level out at some point the beginning of next year, 2023, and then, kind of hover around the same rate for a while, and then possibly go back down is what I've heard. So they could go back down end of next year, maybe in the 5s is what I've heard. So depending on what happens, right, with inflation and what the Fed really thinks it's going to, I don't know.
What the Fed thinks is going to be better for the economy in general. I mean, keep in mind the main thing that they're trying to do is tame inflation. I completely agree with that because, you have to. You have to. I suffered in Argentina a lot of inflation. That's not pretty.
Yeah. So that brings us... Okay, so the next thing I wanted to talk about that I don't think, like... I think some people talk about this, but, like, this is more of just like, my own opinion. It's not really, like, things that I think everyone would probably agree that the atmosphere right now of just, like, life in general for most people is, like, very hard. And a lot of people are going through things. And just, like, the buyer sentiment is affected, I think, by that. And this, like, fearful atmosphere that's going on, like, with politics, with, obviously, inflation, this just... Yeah. Like, life is getting harder to live because there is more inflation and, like, wages, and life is complicated in our day and age because of social media and, like, just trying to be somebody, and just so many different aspects go into it. I'm sure get what I'm trying to say. Like, there's just, and that really affects the housing market. Yeah,
it does. I mean, that doesn't mean that there's people looking for the simple kind of life, but you see a lot, especially in our industry, especially people that want to buy a house, whether it is investing or not. Everything is super complicated, and it feels like everything is just keep adding up. Like it's like we haven't had a break since 2020, and and
it's just like we're coming off of this whole crazy times with the pandemic, like, and I think that has, and people are just tired, and, like, overwhelmed, and we're just all trying to figure out, what's next in life, and so
everything is in a changing mode right now, so that affects a lot your psyche, and having turmoil in politics, having disasters like what happened in Florida, that creates an atmosphere of uncertainty too, because we have a type of economy that something like that could really affect not only the real estate market but economy in general. For example, Florida has a lot of tourism industry. I don't know if it's the main source of income for most people, but it's a huge chunk for us investors, depending on what you are doing. Actually, Florida has been huge for short-term rentals, and what are you gonna do right now? after that.
Well, in the Southwest Florida area. But
Southwest, yeah.
Yeah, and that makes me think about one of the other points that I was thinking that kind of leads into this is, so because of this atmosphere, this fearful and uncertain atmosphere, I think that it is going to affect the economy, and it is going to affect, going into next year, short-term rentals. And here in Minnesota, obviously it's different because of our seasons, and so that always kind of is going to fluctuate during winter for most people who have short-term rentals, unless it's, maybe in Minneapolis or St. Paul, but
or in a center where, like, we know, for example, in S.1 that has winter type of vacational.
Well, no, I think a lot of those are affected too in the winter, but I think I was telling Marcos, and I've heard other people say this, is like a lot of people in the past couple of years have purchased investments that only worked as short-term rentals. So those people, when we see this change in the market and possibly a shift in the demand for short-term rental like stays, that will force some of these people to sell, because they're not going to be able to get those numbers that they calculated. Like buying a short-term rental was so popular in the past couple of years.
Yeah,
and it's not only in Minnesota. I guess this is more just generally across the nation. Like especially in Florida too. Obviously, we know that's going to be impacted, but I think like some of these people are going to have to sell because they don't have exit strategies. Their numbers don't work as a long-term rental. If they don't have enough bookings for their short-term rental, like they're going to be, losing money. So yeah. I think that's something that's going to happen in 2023.
And this brings me to an advice that I heard from Anna and Roy a lot. Shout out to Anna and Roy,
the short-term rental experts here in Minnesota.
Exactly. So we're going to have in our podcast soon too.
We haven't told them that yet.
Yeah. So if you're watching this, get ready to talk about short-term rentals.
Yeah.
Because we need your expertise after this conversation.
Yeah.
But one advice that they always gave us was, like, if you're looking at a short-term rental, make sure that it's cash flowing, or the numbers make sense, at least to whatever your numbers need to be at, as a long-term rental. Because otherwise, you're not going to have all the exit strategies that you need to have in order to make your investment stable. Now, usually, you want to have 4 different exit strategies. Sometimes that's hard, depending on the investment. We have, in the deal that we're going through right now, we have 4 exit strategies that go from long-term rental to short-term.
We're going to do a whole podcast on that, because that has been, and we're still going through it right now, so stay tuned for that. So yeah, that was that about short-term rentals. Prediction, there's going to be a lot of short-term rental owners that got into bad situations in 2023 that will have to sell their homes, their investments. So
yeah. Let's transition to what we have been seeing in the market right now as far as buyers and sellers go. The buyer sentiment, the seller sentiment too. This is, I don't know, how can you explain it a little bit to get into that right now?
So I heard someone on Bigger Pockets talking about how there's this tug of war between buyers and sellers right now, and that's definitely happening in our market here in Minnesota. There's just this tug of war between them. Sellers are like, no, I'm not going to come down in price, and buyers like, well, I'm not going to buy from you because I can't afford that price. So it's just back and forth, and we're going to see that continue. And I'm thinking something's got to give. If the interest rates keep going up, and it's going to be sellers that have to give in, and we already are shifting. I would argue that we're in a buyer's market.
I would argue that too. Buyers have all the power right now, feels like. It depends on the area. There are little pockets where you could still get away with some multiple offers if you have a good deal. But what we see for next year, I'm not crying. I get choked up because of the tea. I'm not crying. What we see for next year? Jeez. So what we see for 2023, really, between everything, is that sellers are gonna have to come down in price. There's just not another way to really, come out of this. Honestly, if buyers are not willing to pay a certain price because now it's too expensive to borrow money, and sellers need to sell, the sellers that need to sell are gonna have to do whatever it takes to sell those properties. That probably means dropping their asking price much more than what they have been. Prices have come down a lot already, and by next year they're probably going to be even lower. The thing is that for investing, you really have to think about the numbers, because if you can lock in an interest rate that makes sense right now, even if next year you can have a better price on homes, probably it's better to just keep buying. Like, that's what we're doing too. If you can save your cash, then it's great. But when it comes to borrowing money, if numbers make sense now, go ahead and buy it, and then you can always refinance, and it's going to make even more sense in the future, even if the price of the house is not yet at the lowest point for the next year.
So that makes me think about that. One of the things I was predicting is not seller financing that. So creative financing is going to be one of a very popular thing for investors to do because of the interest rates and because of also sellers needing to sell their homes. Obviously, they can't sell them with the interest rate, with a conventional loan or something. So people are going to start maybe doing contract for deed or with seller financing,
subject
to seller financing. Yeah. So all these things are I would definitely get educated in how to do them. We are going to be educating ourselves more because we kind of want to, we still haven't done a creative finance deal. So
we tried. That doesn't mean that we tried.
Yeah.
But things.
And we've run numbers and stuff, but it's going to be fun, just got to get creative financing next year with these weird interest rates. So
yeah. And the goal is to have numbers work for both parties. I mean, in order to be able to sell a house, you need two parties. You need the buyer, you need the seller to agree on a price, to agree on terms, to agree on everything. And sometimes, maybe it's not going to be completely ideal for the buyer, but keep in mind that it's not gonna be completely ideal for the seller either. Like, it's not the thing that we need to understand now as investors is trying to meet in the middle in order to be able to keep on investing, because even though prices are gonna drop and everything, and in fear of sounding like a broken record, remember, real estate appreciates over time regardless of how much up and downs are in the market. So 30 years from now, you're going to be glad you invested today.
Yeah. But affordability is still so low. I mean, and that's going to continue into next year. I think next year we're still going to have issues with affordability because of interest rates. And obviously, we've had just this crazy price appreciation in the past couple years. So that's going to have to come down, like we've been saying, and hopefully affordability gets somewhat better. But I think that's going to affect, because homes are so unaffordable. Is that a word? Unaffordable? Unaffordable. Can't talk. So unaffordable. They want move-in ready homes too. So they're like, well, I don't want to have to do any work. I can already afford so much less than I could maybe if they've been looking for a while. So they're going to want to move into something move-in ready. And also because of this atmosphere of uncertainty, I feel like that affects people's willingness to do rehab projects.
Well, it's uncertainty on everything because even people that have stable jobs, the normal 9 to 5, um, we're in a recession right now. So
that's not like set in stone. That hasn't been declared yet.
the recession.
Yeah, that's like a argument between a lot of people. Are we in a recession? Are we not in a recession? All the flags are up for a lot of economists, but we are gonna 2023. Yes, we're gonna see a recession. Like if we aren't already in one, a lot of people say we already are in a recession. But
well, besides that, there's a lot of fear of people maybe not being able to keep their job, or what happens with inflation too, because we are in a situation where inflation is a big deal right now, and that affects your affordability. The minimum wage has gone up, but it still can't afford what people were expecting to be able to afford with that increase, because of inflation. And that's what happens when you have inflation. Mix that up with all the other red flags that we're seeing for recession, or according to some, we already are in the recession. And then you have the real estate market is one of the most important industries in the United States when it comes to the economy. So if you take that into account, now you have a lot of people that are going to be let go of their jobs potentially, even though you have a lot of hiring.
Wants. Yeah, that's what the Fed wants. They want people to start losing their jobs. They want people to start spending less money. So
they want it.
Yes, they've said that. That's what they want. They've actually said that. So that's what they want because it will help with inflation. And I think that they're gonna, obviously they're creating that environment. So yes, like that is gonna happen, in our opinion.
It's really weird to be talking about like job loss and all that stuff when you see now hiring signs all over the place too. The thing is that what you see is probably type of jobs that most people don't want to do, maybe like restaurant type jobs or like construction, factories. If you're a person that works at an office, going from an office to like maybe one of those jobs is not what you want really, but if you don't have a choice, you're gonna have to get used to the idea of doing whatever is necessary to keep yourself afloat.
Yeah.
That's the basis of a crisis too. If you have to change your job and that's going to affect affordability too, because you need a stable job in order to be able to buy a house.
Yeah. Well, I also heard, I don't know the exact numbers, but I love listening to James Stainard. He's an investor, flipper, works with Bigger Pockets, and he's really good. I recommend following him. He was saying how a lot of people are even now just having trouble paying their bills, their utilities. So it was like a staggering number. I don't remember it. So yeah, I looked it up, and 1 in 6 Americans are behind on their utility bills, and that's because those costs are also going up. Like we had a $270 electric bill, was it?
Yep.
Our first electric bill in our new house. Like we were like, oh, it must be like from the past owners.
Yeah. No, it was just the last month, and
we were just like, oh my gosh.
And it's a smaller house than what we had. We also had a different electrical company that was a co-op, but yeah.
So we could see, just because of things like that, and that's really overwhelming to people. Like, I can't pay my utilities. Like, why would I go and look for a new house? Like, can I even afford to keep this one? So it's just, that goes back to that kind of sentiment.
Yeah, the sentiment on the economy, the everything, prices are increasing for food, for everything. You have so much in your plate, and then if you need to change houses, whatever the reason is that you have to move, it's going to be a very complicated time. Unfortunately, especially if you bought a house in the last couple of years, because you are not going to get the same amount of money that you bought it for, and that is for sure. I am sorry if you bought a house in 2021, for example, and need to sell right now. It is.
Yeah, I would say it's going to be pretty hard to get that again, probably get the price. Maybe you could break even, or because you probably pay down some of your mortgage, but.
Yeah. It's going to be, and if you can't sell it for the price that you want, you better have a strategy to rent it out. We can help you with that.
Well, and I think that's another thing too, is there's going to be more people renting out their homes coming up. I don't know where they're going to go after that, though. That's going to be, if they have to move, maybe they rent it out instead of sell it.
Yeah.
But I think that the last thing we should talk about is, like, for investors, what are we going to be seeing?
What are we going to be seeing for investors?
What are the predictions there for us real estate investors here in Minnesota?
I have a couple of my own, and you tell me.
Go ahead.
Yeah. Okay, so again, we talk to everyone in the industry. We try to get ahead of the ball. We read a lot. We watch a lot of videos. We try to take everything into account. One of the things that I've heard right now is actually that applications for mortgages are going up slightly, actually. Haven't heard it from a ton of loan officers, but I've heard it from some. Now, applications doesn't mean people actually buying, unfortunately. But, people are getting used to it. So we may still see some sales. Now get ready for prices to drop because people can't afford what they did before. For investors, this is going to mean probably, in my point of view, that if you need to finance, lenders are going to be more willing to work around their guidelines. Maybe they're going to update their guidelines to be able to write more business too. There are products right now, which I'm sure they're going to go into next year, which are like the 2-1 buy down. So how does that affect investors? Well, sometimes investors need or are able to acquire through conventional loans. That is one thing that's kind of like a positive, guidelines.
You can get up to 4 investment properties with conventional loans.
Exactly. So that is something that I see coming in 2023, more flexibility when you're borrowing money. It may not be as ideal with numbers and all that stuff, but it could be if you're doing long-term rentals, this is going to be the time to buy those. Rents, I think, are going to still go up. People are going to choose to rent rather than buy. Right. We think that just because the cost of owning a house is not only the monthly payments, it's not only what we call PITI, principal, interest, taxes, and insurance. It's also the maintenance of the house. You have to either do it yourself or pay someone to remove snow, to take care of the yard. You need to always fix something. If you have a critter, if you have a leak, whatever it is. So when you're renting, right now you probably are going to pay less than if you buy that same house, actually. And you don't have to deal with the maintenance. So we're going to see a shift, at least for 2023, where people are renting more than buying. That's my thought. Mm-hmm. What do you think? I've been talking for the last 20 minutes almost.
Yeah, I agree with that. We're going to, Ken McElroy talks about Renter Nation, and I would agree with him. I think there's going to be a lot more people renting because of homes are so unaffordable. So, yeah. As far as other predictions for investors, I think that there are going to be good deals. There's going to be deals. So if you have cash, definitely save it. Like, plan on investing in 2023. We definitely are planning on investing. Want to try some creative financing. But yeah, be prepared and
get your lines of credit all ready for next year, because it's going to be an interesting year to take advantage of all those opportunities. Some people say it's going to be just as, or maybe even worse than 2008. I don't believe so, but
if it is, be ready.
Yeah.
let's be ready, and let's invest in like 10 properties next year.
Yeah, buy 30 properties, and then you can do different strategies. Like you buy and hold, and then maybe when the market gets better, you can sell a few and do a 1031 exchange and buy a multifamily or an apartment complex or something like that. Like, this is the opportunity for investors. This is going to be the opportunity for investors that have been saying, well, I'm not buying because the market's too high. Well, you have to now get ready to buy, even with high interest rates, because you can always refinance. That's what most people, I think, is hard for them to understand. Not investors so much, but the end buyers that are going to live in a house, and that affects the flips too, because you're only going to be selling a house that's moving ready and at a good price, which try to do a flip under those conditions, you have to get it for really, really cheap. So,
and maybe there will be opportunities. Get something. I mean, even if you hold it for a year, if you want to do a long-term flip, maybe you could get a contract for deed or something where the numbers make sense to hold it longer. And if you hold it for a year, then you can 1031 exchange it, or wait for the market to just even out a little better and be able to sell that.
Yeah, maybe cut your losses, and instead of losing, I don't know, $2,000 a month in your holding costs, you're at least renting it out for, something and breaking even, or only losing like $100 a month, and then when it gets better, you sell it. You hold it, you can do a 1031 exchange. As far as the knowledge we have, that we were told by our accountant and the experts we have, in order to do a 1031 exchange, you have to hold a property for at least 12 months. So if you have the option to do that, then you don't have to worry about capital gains with your flip, because there's benefits to everything.
I think that's another, just maybe one last thing, like you made me think about, I think there's a lot of investors who have flips maybe they're working on right now, or that are going to be going on the market next year when things kind of go crazy with interest rates. And I think some of those people are going to be in trouble. They're going to have invested in something where they were told an ARV was way higher than it actually is, and with prices dropping, because yes, we predict that they will drop, and I feel like they could drop to 20% here, in some areas.
Yeah, that's a very likely scenario, a 20% drop. Like, that means that that means that we're gonna go back to 2019 prices.
Yeah, we could go back to 2019 prices, which would be nice. I mean, we need that. We need that to happen. So we'll see. But get ready for the deals.
So we wanted to share our thoughts with you guys about 2023. What we are talking about right now is based on what we're seeing currently. So if things change a little bit in the next couple of months, then we're gonna have to update our thoughts too. So maybe we do another video later.
We'll come back and update you, and maybe December there'll be lots more things that have happened at that point. So it'll be fun to kind of like come back right before we actually do move into 2023 and see what we think then.
We got to the end today, and I don't think we can talk about this anymore. I am hungry because we haven't had breakfast yet.
Yeah. So we will be back next week we're going to have our friends, our guests, some other guests on the podcast. We've already filmed it. We just have to do some editing, or Marcos has to do some editing.
Yeah.
So stay tuned for that.
All right. See you next week. Bye. Thank you for listening to today's episode. We hope you enjoyed it and took some valuable information out of it. If you want to reach out to us with comments or questions, you can find us on Instagram, Facebook, and our website, milagrohomesre.com.